Good morning, everyone, and welcome to the European crossover webinar. And we have German data coming up right now. Still waiting for the survey. There we go, 95.7 weaker. So obviously we get the euro dipping lower. Bunds are also have moved to all-time lows again in rates. Conditions coming in at 99.4, was expecting 100.8, but the once again the key was at 95.7. Did go in and come in lower. Expectations also coming in weaker. And certainly we're seeing the euro down here. Euro bund down over 2 basis points. And currently now slightly below the deposit rate. Let's go on and go into. And if we look at the bunds, once again, new all-time lows in bund rates here. Certainly, impacted immediately, although it was already at new lows already, but certainly impacted right now with the latest German IFO readings here. Still here at this key 1128 area here. Looking ahead, we will have Italian flash trade balance. We actually should have come out, that hadn't popped out yet, but we do have obviously the big ECB day, and then of course we have durable goods and household trade and retail inventories. Of course, the usual jobless claims and Mexican retail sales, as well as KC Fed manufacturing. But obviously, the big driver today is going to be the ECB. We're going to move this out of the way. As I said, we can see here the euro still at these lower levels, actually has went to new lows as the German IFO was released. We take a look at the euro. And you can see here 1128, and what we're looking at is potentially for this market to break and on its way down to 110. What we're looking at with a pit stop, as we mentioned yesterday, a pit stop at 1079. So looking for 110, potentially a move down to 110. Obviously, we could even see even lower. So Harkins a move to potentially 912, 913, even just a bit right there, coming in probably closer like about 928. But this potentially augur a move to 110 with a pit stop at 10. What we have mentioned before is a pit stop at 10 there, a pit stop at 1079. You can see those touches coming across here. There you go. That's what we're coming up with. 1079, 1010, and really this would be like at 928. IFO economist mentions that the domestic situation faces a turbulent time ahead. But of course, the euro is over here scrubbing the bottom. So I'm not, this may have impacted, let's say if we were up in here and say, okay, we take a dip. So that's just some commentary coming out of the IFO. Dollar index, of course, remains quite strong. As we mentioned before, we're right up here at this key 97.89 area. You can see that. And the market has ventured above the 97.89 level. But each time we've gone and paired back. We may have stayed just above it, but the market has lost its momentum to move higher and we've gone and slid back and made a venture above it. Same thing. Last third time is a charm, but no, it's not. And we see a very, very good pullback. So we're not very far from the outright highs of 98.37. Not that I expect us to hit that today, but we can certainly get up above 97.89 now. We were looking at potentially, and I did the basic technical analysis with Blake out on holiday. I've done the basic technical for the last couple of days. Have here the dollar index is holding a strong bid just below major level 97.89. A dovish ECB will allow the dollar to blow through, though. Resistance will be 98.10. So that's what we're going to be looking at for today. Dollar CAD still hanging around here with the potential to want to move higher. Peso has pared back. You know, we had that 1908 that kind of held the market for a little bit as we had come short of that. The real key resistance, the make or break level, which is 19.23.6. Dollar Yen is staying relatively quiet, although easing back a bit. Okay, and taking a look here with the Aussie Dollar. That's also eased back. One of the things that helped drive a little bit lower was, although it was already weakening, was the China. Their central bank governor was stating that even if the Fed cuts rates, they don't expect to cut rates in suit. That they're, what he said, comfortable with their rates as they stand right now. The Aussie was already weaker, but that certainly kicked it down the stairs, and it has stayed weak since then. Moving here to the sterling versus the odd, we had generated a buy signal nearly 3 days ago, and we've seen that continue to move higher. Our resistance level coming up, I had a gentleman ask him where he could be a good area to, if he was trying to short it. I mentioned because we're on that buy signal, you want to be a little bit patient. But if you were looking at that, we mentioned this yesterday, and also the daily roundup would be here at 79.53 if you're of that ilk. That's where I think we'd see a nice pause right there. You're also still holding steady overall. It's still, I mean, we're relatively speaking, I'm saying on a very short-term basis, with the weakness in the Aussie across the board, we've seen the pair be able to advance. Obviously, even the sterling odd looks better than what the euro does. Euro odd does, but certainly, like I said, with the weakness in euro, things still remain the same. Gold still holding steady here, as I mentioned. The potential was it could, technically speaking, it could have moved a little bit lower. But I said you're going to have that undertone bid with the ECB expecting to cut. Aussie Yen is still weakening from this point. And with that, we'll go in and go into the news. The ECB remains stuck, euro remains stuck near 2-month lows as bears await a dovish ECB. The euro is mired near a 2-month low on Thursday before a European Central Bank meeting that could signal monetary easing as growth in the currency zone falters. Sentiment towards the single currency took a big hit after data on Wednesday showed Germany's manufacturing data contracted at the fastest pace in 7 years, while French business growth unexpectedly slowed, sending European bond yields lower. The Australian dollar dipped after the country's central bank governor said policy could be eased again, indeed, and it was reasonable to expect interest rates to remain low for an extended period of time. Investors focus in Asia predominantly on global central bank and political developments, particularly in Europe and the United States. Sterling held on to gains even after Boris Johnson became Britain's new prime minister on Wednesday, but investors are still wary of a no-deal Brexit, which Britain would leave the European Union without a trade agreement. The dollar found support after U.S. Treasury Secretary Steve Mnuchin said he would not advocate a weaker currency. Investors' focus shifts to the ECB meeting later on Thursday and a widely expected interest rate cut from the U.S. Federal Reserve next week, both of which are expected to dictate the tempo for currencies and bond yields in coming months. I see more downside for the euro because there are no good signs coming from Europe at the moment, said Tsutomi Somo, general manager of fixed income at SBI Securities. Don't expect the European bond yields to rise anytime soon. The U.S. is headed toward lower rates, and which would be used to be a supportive factor for the euro, but it's no longer the case. The euro has fallen 2% this month on increased speculation the ECB would join the central banks in easing policy as a trade war between the U.S. and China weakens the global economy. Traders see a 40% probability that the European policymakers will lower a key deposit rate by 10 basis points to minus 50 basis points. If the ECB keeps policy on hold Thursday, economists say Draghi could flag a rate cut for the next meeting in September. The IFO Institute will release its closest watch index. We did go and just cover that live. To be sure, while sentiment for the euro remains weak, some investors argue that further declines in the European government bonds are likely to be limited. Europe's economic fundamentals have worsened, but at this point, most of this is already priced into the market, said Kayoshi Ishigami. The ECB needs to ease policy, but I don't think the European yields can fall much farther. I don't want to chase the falling euro and falling yield traded at this stage. Starting was changing hands at 24.72. And we'll move on to the key story, which is really the ECB and how we want to look at that as we come in. One of the things is I almost feel like they are going to go in and just ease now because I don't see Draghi saying, well, let me just go and wait till September. I think he's just going to, especially with this German IFO data just coming in, we continue to see further weakness. And now with France, on PMIs coming in weaker because, once again, Germany's led the charge, but we've seen other countries like France and surprisingly even Italy hold up relatively well, and now we're seeing France kind of, I don't want to say capitulate, but now starting to turn, to the negative. With the finger on trigger, ECB aims at more stimulus. The ECB is all of a sudden to ease policy further on Thursday with the biggest question whether it staggers its moves over several months or opts for a big bang. I'd almost have to say with Draghi's history, you have to argue that it would be for the big bang. With inflation stuck well below its target, the U.S. Federal Reserve already in easy mode, the ECB has flagged more stimulus, hoping to prop up confidence amid a steady flow of bad news that threatens to unravel years of unprecedented support. It could cut interest rates, perhaps, while helping banks offset the cost to them and restart a recently shuttered bond buying program or raise the bar for any future tightening of monetary policy. But with economic data relatively stable, there's a little urgency to deliver a comprehensive package this week, suggesting the ECB could take its time to prepare measures and wait for the Fed to set its own course. This will be crucial for determining the euro's exchange rate against the dollar, presently the single most watched variable for ECB policymakers. At 11.13, the single currency was flirting, 11.30, was flirting with the two-year low against the greenback on Thursday. Having stoked easing expectations already, Draghi will have to deliver at least something on Thursday. If nothing else, he's likely to unravel revamped interest rate guidance that makes it clear a rate cut is coming. We expect Draghi to pave the way for further easing and in particular to continue fueling quantitative easing expectations, said BNP. However, now we think the ECB will only pave the way but deliver later. Expectations of ECB stimulus are already driving borrowing costs for Eurozone governments with the yields of government 10-year bonds. The cost for the action is supported by weak economic data that some policymakers argue that the outlook has not changed fundamentally from a few months ago, and so the ECB should wait. But right now, we're continuing to see this data come in just weaker and weaker, so I don't see why they would wait. And, the fly in the ointment has always been the Germans, and they're the ones leading the charge with all the weak data, so I would think that they'd be running the forefront now with flag in hand for more stimulus, to be quite honest with you, despite their years and years of, what you want to call it, austerity. The central bank's problem is that any measure it takes with complications will have only limited potency, given that the ECB has already exhausted much of its firepower. It's not clear, as negative rates in a balance sheet as big as 40% of the Eurozone annual GDP, another rate cut for the net asset purchase will do much more beyond boosting the market valuations, said Baron Barr, economist. But with no major support on the fiscal side amid very low core inflation, Draghi believes it's worth trying. But more government bonds could also create problems for the bank, as it's clear it's a self-imposed limits in several years of the 19 Eurozone account countries. I feel economists say a recession is spreading across other sectors, many other sectors of the German economy. I'm hearing that in my ear. I feel economists are stating that the chance for further weakening growth is really increasing among other countries. I mean, not other countries, but other sectors in the German economy. While policymakers say they have leeway in adjusting their rate cuts, critics of the bank's assets purchases have already launched several legal challenges, almost certain to take the ECB back to court. I think that's going to weaken now as we're just seeing this weakness just flourishing across the board. A rate cut would also increase the pressure on the ECB to shield commercial banks from some of the side effects of the negative interest rates. A proposal for compensation in the form of a multi-tier deposit has also come up several times, only to be rejected by policymakers. The negative deposit rate is effectively a charge on banks to park cash securely with ECB overnight. The evidence is up until now an adverse effect of the bank transmission mechanism is not very convincing, said ABN AMRO. The benefits of the system are moderate. The simplest moves would be to redesign the ECB's interest rate guidance, which now indicates rates will keep steady through 2020. That's to be another. So we'll be looking at also, obviously they're looking for guidance, but I would think that they'll take action this time because, to me, if there was any question, I think this German data will continue to see this weakness is really just, is, I'm trying to think of the right word, but basically strengthening that I would think resolve to go on and take action immediate as opposed to waiting at this point. With that, we're going to move into the bias chart. And our support we already mentioned. Potentially we can move to 110, but we're looking for the pit stop on the daily for those that are just coming in now. So potentially we could make a move for 110. We've talked about here if we pull back down here, but we were looking for a pit stop at around 1079. That's not that far away, but then again, look how oversold the euro is. So what you could potentially see is the euro blast through that and then try and hold that area. If it does, looking further across here, we have right here 1052. So you got 1079 and 1052. The half mark makes some sense to a lot of people also, so they may want to push as low as that. So let's here's what we're going to do. $10.79.52. So we're really looking at 1079, but if we blast through, this will be important here, this 1052. So it kind of gives you a little bit of a, 1079, we're looking for a pit stop there, but the market could overshoot that. And then what you'd be looking for is the market to hold against this 1052. And then if we were to blast down there, we could end up, you'd probably want to do some good short covering and then see the market probably try and make a move, probably bounce back, maybe challenge at 111, get above it, and then maybe falter a little bit. On the upside, well, the upside is going to be 1180. If we got some change, it's going to be 1180, which doesn't sound a whole lot, but you know what? Maybe that is a whole lot considering what the euro is at this point. The bigger move is, up here would be 1207. I don't expect that to rally that kind of a move. We have to see a huge move, but it'd be 1080 is what we'd be looking up on the euro. I meant to say 1180 on the upside. A stretch could be seen as far as 1207 on a blast where we hit a bunch of stops, but that'd probably be about it. 1180. Like I said, you could stretch it out to 1207. I don't want to mark it here because it just seems like we're riding that thing, and I don't think that they would, unless I don't see the ECB not taking some form of action or laying the groundwork. If we saw a blast like that, it could take us up to. We've got 1207 and 1229, on these ultra stretches. And then I think that'd be it if we saw that kind of a move all the way up to 1229. But really, your real resistance here is 1180, but the potential here is 1079, 1052. Let's go on and move on to the cable. As I mentioned, I did the basic technical. Go into the cable. Did that last night. As I said, we break out on holiday. Um, I push on here that for the cable. Now with Boris Johnson, now that Boris Johnson is settling in as a new PM, the market may take a temporary pause. Support is 24.38 with upside resistance at 25.44. So let's go with 24.38 for our downside support. And I did mention 25.44, but let's look at something a little bit more immediate. If we can see something that may just take us all the way up to 25. Hold on, let's take a look here on the 2-hour chart. $25.42. With that, let's go on and move into the Aussie dollar. Well, we've seen the Aussie going and pair back here. Not only, I mean, we were already pulling back, and actually, we had this solid close about 70.27, really opening the door potentially 71.80. The Aussie paired back, which was expected a little bit. But then, as I mentioned, we had already slid, actually on this bar when China said, hey, look, we're not going to, if the Fed cuts, we're not going to follow through. We're comfortable with our rates. That knocked it lower. And then, for the RBA stating, hey, there's a potential for the rate cut and rates will stay lower. That's kicked the Aussie even further. I'm not sure it'll make it all the way back down to 68.44. That'd be a bit of a stretch. You can see right here coming across, we'll go right there with 69.60 for our buy chart support. On the upside, yes, 70.16. I like this 70.16 coming here. And with that, we'll move into the Kiwi. Well, we're right here holding the 66.91 here. And I still like it here. And it's a key level, and it's, I mean, not that we couldn't push maybe a few pips lower, but I like this. I'm saying in a sense that look how well it's holding compared to the Aussie. We're really holding down the fort here, so we'll stay with the 66.91 on the bias chart support. We actually give it a few pips lower, so we'll go with that. We'll, like I said, it couldn't overshoot it a little bit, but that 60.91 is very, very good, very major level, and I think it. I think the Kiwi under the circumstances is doing very well defending that. On the upside here, it's going to be 67.36. No changes on the upside here for the Kiwi. Aussie still remains bullish, but it's just hanging on by just a needle or a feather here with the Aussie, just barely hanging on to that bullish sentiment. Let's go and move into the dollar CAD. Now we've moved higher, but certainly, like I said, if you look at this overall, it's still bearish. But the key thing is it's defending this 31.36. At least we make it, and make it a stand here. Support on the downside. Well, if we do slide back, really opens the door potentially to 31.02. 31.22 was the money area that we talked about on the way back, that we are 31.20, that we would see bids come in, and we saw the market pair back to 31.22. It popped up, then we challenged it a little bit, moved a little bit lower, and we're just holding here. You can see today's low is 31.26, but potentially how far could it drip back if it does slide back? Be 31.02. So, in case the market does bulls kind of recede, potentially, like I said, we can see that slide back, but I think that area would be well defended. The upside I've already mentioned here is potentially a move up here to so potentially we can make a move up here to 31.90. I know some people are looking for 30.32. So if we do get the little bit of a chug moving up in here, I think we can go on and get past this 31.62, and that will really open the door for up to 31.90. Immediate resistance right now is this 31.62, but once again, I think we have the opportunity to go and move up to 31.90. We'll just go on and, for right now, that'll be our resistance, 31.62. Remains the same. Let's go into the dollar peso. Well, like as I mentioned before, it's all about this 1923-6. Even when I'd mentioned before, even with the Mexican foreign minister had resigned on Twitter, and we saw that big bounce back, we still couldn't close above 1923-6. We made an advance yesterday, from the day before yesterday, but we couldn't fill the bill and get above 1923-6, and we slid back. Previously, the resistance had been 1915, and that had actually held the market momentarily as it eased back before it reasserted itself at the end of the day, finishing just shy of the 1920. So right now for resistance, price chart resistance. Hold on, I have something in my eye. Bias chart resistance on this is going to be 1915, so return back to that 1915. And on the downside, let's go on and update the bias chart. When you look here, this 1908 is still holding overall. I mean, we're below it right now, but if you want to move this just a shade lower, it's right there at 19.057. So we're holding here overall okay. For those that are bullish, the dollar mex, I haven't done anything with it since when I was long from last week. A good level, but the market kept paring back. I ended up getting stopped out on that position. Going on here to the dollar yen. Dollar makes me laugh in a way because I'm thinking I could just imagine saying, okay, now we're really now gonna move. I'll buy it on this dip down to 1915, and then it turns around and slides down. So I'm glad I had not done anything with it. Really didn't trust the move on it. That's why. Although it has held that long-term trend level, but it seems to go in fits and starts. Like it defends it, and then it gives it quite a bit of it back. Then it defends it, and we saw the move from a couple days ago. Then we give most of it back. So, but anyway, that being said, dollar yen is trading relatively quiet. No changes here. So on the bias chart, it's going to be 778, 833, and really we're looking potentially the real resistance is 850. I'm going to move this up to 850 because that's where the resistance is. I mean, 833 is holding the market, but I'm just saying where can we move to, because you can just push up a little bit higher and hit some stops beyond 833. Where would they start to run to some resistance would be the 850. We'll go and move into the cash dollar index. Well, we covered this at the beginning of the show. This 97.89 is a very, very big level. Right here, you can see that. But we can easily blow through that. And as I was saying in the basic technical analysis with today's ECB, we can easily blow through this. So where's resistance? Well, we know I don't expect us to go to the outright highs we've had at 98.37. Well, you never know. That would certainly be a take right there. But immediately speaking, it'd be 98.10. So if this probably would correspond with the euro challenging the 1079. So we'll look for 98.10. And let's take a look at something else here on the 2 hour chart. Right there is, I see here is 98.10. It's called 98.11. 98.11 right there. Beyond that would be, the outright highs. Because if we get up here, it's going to spook the market. There is some resistance here at 98.26. There you go. On the downside, we're going to have to move this right here at 97.45. Just 36 below it. I mean, if the ECB, I don't see them not taking or laying the groundwork, so it'd be 45.36, but I'm comfortable with this 45 for now. Can we go dip below it if some kind of surprise? Certainly. But once again, the dollar's holding up rather well. Um, let's go on and move in now to the cross rates. Okay, so the New Zealand yen is pared back a bit from the gravestone doji of 3 days ago. Support comes in at 72.26. We're just about there. You can see they're here at this level, with resistance at 72.89. So we're going to go with 72.26 here. We had 72.25. We'll leave it right there. That's fine, 72.26. And the upside, what we had when we're looking on the 2-hour chart was 72.68. Potentially, like I said, if we were to get beyond that, we're on a daily, we're looking at the 72.89. But yeah, 72.68 is just fine for right now. So no changes there. Let's go and move into the euro yen. Says the euro yen is hanging on by a thread before a move to 1984, which is the 88% of this entire move of 1883 to 2748. The ECB takes that action. That's where they're going to be looking for. That's going to be the bonus chart support. 1984. We had that in place since yesterday. No changes. Upside 2060. No changes at this point here. We'll take a look at it on the 2-hour chart. This thing is just weak as all get out, forming a little mini hammer, but that mini hammer will be bye-bye if the ECB goes and takes some aggressive action. So let's go and move into the euro odd. And it says the euro odd has rallied, and this is just off the basic technical that I did right here on the basic technical in the ForexAnalytix area in the Asian session. The euro has rallied on the short-term weakness across the board in Aussie. The pair is struggling with the resistance level of 59.68. We've actually gone above that. Support comes in at 59.26. So here we look on here on the 2-hour chart. You can see here we're just pushing above, which had been our resistance here. And we're starting to continue to push a little bit higher. Once again, this is driven on what we've seen here with the weakness in Aussie, but we can certainly lose that rather quickly on action for the ECB. We'll have our resistance coming in right there at 59. Let's go move this up here. 59, let's call it 59.84. And support's going to be here at 59. Let's say 26, but 59.33. 59, we'll call it 59.32. And moving on to the Euro, New Zealand. So the euro remains stuck in a tight range. Support comes in at 65.87 with resistance at 66.53. And so we're looking at 66.53 on the upside. And let's go on and tag that. Well, we think this is rather limited ahead of the ECB action. And I put 66.53, that's fine, 66.53. I know I had that 50.87. I'm going to stay with this 53. And then on the downside, 66.15. Let's go and move into the Aussie Yen. Well, it's saying here that the Aussie Yen had tested the downside level of 75.31 and held, and we're here back again, challenging again here. Certainly this market looks, and you can see right here, right, they're challenging that 75.31. You know, I think it's going to hold overall, but we have the bias chart, not bias chart, but our support level intraday just a tad bit weaker. I think we can go and tag that. It's not that much lower, which would be 75.21. I think we'll hold overall, but for right now, she right there, 75.21. Now we look at the daily. It's doing okay. You see, I'm seeing some good support here, but how much further can they dip? I'll go with the 21, and then looking on the upside, keeping it pretty tight. It's going to be 75.67. Moving on to the guppy. Says Guppy found an upside bounce after challenging and defending the bias chart support of 34.25. Upside resistance is the day's high, 35.28. Well, we got above it and we're kind of sliding back down the old ladder. Um, right here for today's gonna be right there, 35.15. And on the downside, right there. Mm, 34.49. I'm not so sure we'll see that today, but I think we could see that tomorrow. 34.49. And lastly, let's go into the starting odd. Sterling odd generated a buy signal a couple of days ago and has seen follow through, actually 3 days ago now, seen follow through to the key resistance level of 79 cents. But the resistance, and we did cover this in the day before and also in the daily wrap up, is going to be 79.53 if we can punch up a little bit higher. Kind of mixed bags here because if the Aussie continues to weaken, we can certainly push higher. But the sterling's already had a little bit of short covering. May have a tough time, but if we can get up there, it's going to be 79.53 for the bias chart resistance. It'd be a good area for longs, very short-term longs to have taken a pause there. So it'd be 79.53. And right there is going to be support. It's a long ways down if it does take that dip. Let's see if we can find something a little bit shorter based. There we go, 78.26. So here we are. We're just holding just above these lows here at 11.33 here on the euro. And just to revisit that once again, potentially a move down to 110, but what we're looking for is a pit stop at 10.79 with a push below that that could extend to 10.52. And moment. So 10.79, we're looking for 10.79, a pit stop at 10.79 with a potential move eventually to 110. But if we do blow past that, I don't think we can blow past 10.79, which isn't that far. But on the downside, I think you'd have some area. If we try and challenge that, we'll look for that 10.52 to hold. So if you get short or be short, those areas I'd be looking on the upside. If they did nothing, I really don't see that would be coming at 11.80. If they were to stretch things, we do have 12.07. And that's what we have now. Good luck trading. We'll catch you in the chat room. Thanks for joining us here on the European Crossover webinar.